Welcome to Southwest Florida Real Estate Update, hosted by area realtor Jim York and York Real Estate Group of Downing Fry Realty. Our show will bring you the most up-to-date information about the local real estate market, featuring leading experts in the real estate field.
Hi, I'm Morgan York with York Real Estate Group, and welcome to Southwest Florida Real Estate Update. Today we have our host Jim York and his guest Chris Mitchell, owner of Brightway Insurance.
Thank you, Morgan, for the introduction. Well, we're here today with Chris Mitchell of Brightway Insurance, and Chris is a person that I do a lot of business with here in the local market, and I'm glad that you came on the show today. And we're going to talk about the 5 most basic mistakes people make when they're buying insurance, right? Mm-hmm. So before we start with that, why don't you just tell our viewers a little bit about yourself?
Okay. I am an owner of a insurance agency with Brightway Insurance. We're an independent agent. So what that basically means is obviously we can write with a lot of carriers, and we have about 50 home carriers that we write with, along with several other lines of business that we do. So we have the ability to check with a lot of carriers for customers to find their best spot.
And where are you located?
We're in Fort Myers on Daniels Parkway by 75.
Well, you can sell insurance anywhere in the state of Florida, right?
Yep, anywhere in the state, yes, sir.
So what I usually do with my clients, and you can elaborate on this a little bit, but I usually, before we purchase a property, especially a single-family home, I usually give you the address, and you kind of give me a rough idea what the insurance cost is going to be. Mm-hmm. So when I say 5 basic mistakes buyers make when they're buying insurance, we can kind of maybe turn it around and say 5 mistakes they should avoid when buying insurance. So let's start with maybe when I send you an address of a property, what do you look for?
Well, typically insurance companies, as I mentioned, they're all a little bit different. They all have different guidelines. So when I look at a home, one of the big things you look at is the location. You look at how old is the home. You look at the occupancy of the home. Those are some of the key factors immediately that you want to determine about the home, because those are the items that are going to determine the premium primarily. And
how about if they're in a flood zone? How do you detect that if they're in a flood zone or not?
Well, FEMA controls most of flood.
That's right.
So what we can do is we can take the address, and there are places on the web where we can go and actually pull the address, and it will tell us what zone they are in. And of course, what zone they're in is going to determine whether or not for example, if they have a mortgage, if they're going to be required to carry it, or if it's going to be something that they can actually choose to. Or sometimes insurance carriers will actually, they'll also require you to carry it if you're in a certain zone.
In those zones, there's X zones, different zones. Can you just explain to our viewers those type of zones?
Yeah, there are primarily 3 categories of flood zones. So you have X zone, which is called a preferred flood zone because those are the least likely areas to be flooded, and so you have the better premiums. And then you have your high hazard or standard zones, which those are primarily an A. And there are different categories of A zones. For example, you have an AE that's a little more expensive versus an AH, which is less expensive. And then you've got a V or a coastal zone, and those are the properties, as you might suspect, are right on the beach or just off of it. And those premiums are, of course, quite a bit higher.
Right. And when I'm with a client and for buying a property or they're buying a property, and I always try to ask the seller if they have a certificate of elevation. So maybe you could explain to our viewers what that is.
Well, an elevation certificate is used to determine what the premium will be. And it depends, again, going back to the zones, because you'll only be required to have that to get to the premium. Number one, if you are in an A zone or a V zone, if you're an X zone, you actually will typically not need that, okay? It's very rare you would ever need that in those situations.
How about in a condo? Would you need that get a condo insurance?
Yes, it depends on the zone. Again, if you're in a higher hazard zone, then yes, they will require it. However, if you're a condo unit owner, you actually, the Property Management Association will typically have one on file that can be used for you.
Okay, and then when you get a survey, they survey the lot. Do they automatically ask for elevation certificate, or do they do an elevation certificate automatically, or do you have to ask for them to do one, the surveyor?
They typically will not do one automatically.
Right, that's what I thought.
So when you're buying a single-family home, a lot of times what we'll tell buyers is the best thing to do to save yourself some money is to ask the current owner if they have one,
Right.
because they never expire. So there are also places online in the county records, whether or not you're in Lee or Collier or Charlotte or whatever county you're in, where they will store those. So sometimes we as agents can pull those out as well. Only as a last ditch would you say, okay, go to the title company and add the elevation certificate.
Okay, so, you know, years ago, not too long ago, I was selling a home to some people, and the wife wanted this particular home that was built in 1997, and then the husband wanted this home built in 2003.
Mm-hmm.
And they were kind of arguing nicely about it, so I was in the middle, you know, so I wasn't taking sides, but I said maybe we should check and see what the insurance rate is versus one versus the other, because they did have a strict budget.
Mm-hmm.
So maybe you could explain the differences that could be in a premium between an older home than versus a newer home.
Yeah, so because of Hurricane Andrew, the new building codes were implemented on our coast in March of 2002. So if you're looking at a home, say 97, as you said, versus a 2003, the premium will be quite different, because the coding, every single home built 2002 or newer in our coastal counties
Mm-hmm.
were built up to these newer codes. So insurance companies take that into effect, and of course what that means is your home, the premium is going to be lower because your home's able to withstand wind damage, it basically withstand it more than it would be an older home.
Mm-hmm.
In addition, sometimes with the newer homes, you'll more often have what's called a hip-shaped roof,
Right.
which is better for your premium.
Yeah, so that brings me to our next question is wind mitigation. What is a wind mitigation report, and how does that affect your insurance rate?
Well, wind mitigation report, it's a report that is a standard state filed report, and what it does is it tells insurance companies how resistant your home is to wind damage. So an inspector will go to your home and he will need access to the interior, and he'll go to the attic and he'll take pictures of the trusses. He'll go outside the home to check the roof shape. He will also see if you have got hurricane shutters or impact glass, etc. And then he fills out this wind mitigation inspection, and the results help determine your premium. You can potentially qualify for up to 6 or 7 discounts. However, unless you have a brand new home, it's almost certain you won't get all those. However, with the new codes, when you put a new roof on, you are actually going to qualify for several of them.
And what's a 5-point inspection?
Well, the 4-point inspection.
4-point.
Yeah, what that
Sorry.
does is that actually checks 4 main areas of the home that insurance companies are concerned with.
Mm-hmm.
Your roof, your plumbing, your heating and cooling, and your electrical systems. And it basically tells the insurance company, are these items in good condition? What is the remaining life left? And are there any red flags due to their age?
Do you need one of those if it's built to the new hurricane standards, the newer homes?
No, the only time you will need a 4-point, it depends on the age of the home.
Mm-hmm.
Primarily, insurance companies, if the home is older than 30 years, many of them will ask for those. However, a lot of the companies now are actually doing their own interior inspections.
Okay. Well, Chris, we're going to take a little short break, and we're going to be right back in 1 minute, and we're going to kind of talk about some other areas that we feel that's important in reducing your insurance rates in the state of Florida. Thank you.
Thinking of buying or selling a home in Naples, Marco, Bonita, or ESTERO, Florida? Think of the most experienced York Real Estate Group associated with the #1 brokerage in Naples, Downing Fry Realty, which produced $1.9 billion in sales in 2014, controlling 43% of all transactions in Naples. Jim, Michael, and Morgan York make up the York Real Estate Group of Downing Fry Realty. With over $250 million in sales transactions, they can offer you the expertise and trust you want and need in a realtor. Call them today at 239-273-6727 or visit their website, www.naplesyorkrealestate.com.
Welcome back. Well, Chris, let's talk about the age of a roof. How does that affect the insurance?
Well, in Florida, the age and the quality of a roof are very important here, and mainly because of our weather conditions. You know, it rains quite a bit here. The sun is very strong. You've got high humidity, and of course we're prone to hurricanes and a lot of wind here. So you know the materials tend to deteriorate quickly, quicker than they would up north. So down here, you know, we primarily have three types of roof, right? You've got your shingles, tile, and metal.
Right.
And insurance companies, they're all a little different in the sense of how old can the roof be in a situation where they'll accept it. So when you've got shingle roofs, many insurance companies will not allow you to write a shingle roof once it is over 15 years old. Now some of them will go up to 20, and there's one that will go up to 25, and that's the state-run insurer that we have here. When you get to tile roofing and metal, you have an additional lifespan that they'll allot for, and tile typically is 30 years or more. There's some companies that do cut you off at 25, and then metal, you know, typically will start at 30, and they'll go up. Some companies go up to 50 years on those.
So it's important when they do have their roof replaced, they get it permitted and use a real contractor, correct?
Absolutely, because we discussed the wind mitigation earlier.
Right.
So when you have a roof done, if the correct permits aren't involved, you can miss one or more discounts on your policy, and those can be very significant. You know, several hundred, $500–600 a year, depending on what your premium would be. And of course, over the lifetime of a roof, I mean, that almost pays for a roof.
Right. I have a client that in fact, you have their insurance, okay? And they bought an older home, and they've been talking to my daughter, it's really her client, about putting a new roof on. It's a shingled roof, asphalt roof. If they put a metal roof over the asphalt, would that qualify rather than taking off the old roof and, you know, redoing it in asphalt? It might be less expensive for them to just put a metal roof over the asphalt without ripping it off?
Typically, it will provide you a discount in one area, but in another area it may not. And what happens is a lot of insurance companies, they ask you if there are any, you know, roof overlays, how many layers are there, and they'll typically allow you to have one more layer. But if you have two, then actually companies won't write you anymore. But so yes, it can affect your premium.
So if in their case they only have one layer underneath, if they put the second layer on a metal, it would be okay then? It
would be okay to insure. The question would be, are they going to qualify for a certain discount on wind mitigation?
So would they be better off asking you before they did it?
Yes, absolutely.
Okay, and you could tell them, okay. Okay, the next issue I think down here we have is plumbing issues. So maybe talk to our viewers a little bit about plumbing.
Yeah, so in Florida, they actually recently completed a study this past year, and it talks about water claims. So in our state, the frequency of water claims has gone up almost 50% since 2010. And the severity of those claims has actually gone up about 28%. So insurance companies, you know, understandably are becoming very concerned about this. So that leads you back to plumbing. So one of the, in the 90s and 80s, and even in 2000 and 2001, a lot of homes in our county were built using what's called polybutylene piping.
Right.
Now that, and what the problem with that is, they're very prone to leaks, and because of how they fit. And so because of that, polybutylene's not installed in any newer homes. However, there are a lot of homes that still have it.
They do.
There. So when the insurance companies always ask you, for, you know, does this home have polybutylene piping? And the home inspection should tell you that, but sometimes it's behind the walls, so the home inspector may not pick that up. And what happens is, if you've got polybutylene piping, what that means from a home insurance perspective is you're down to a handful of carriers. And with those carriers, they will either exclude water damage completely, or they will limit it to $10,000. And those companies that will insure it, even at that limited amount, they do have an expectation that it's in good condition. So they could come out there and say, no, you actually need to replace this, in which case, if you have to replumb an entire house, just your average home, you're probably looking at, you know, $4,000 or $5,000.
Yeah, that is what the cost is. How about if it's in a condo and you did it from the walls out? Is that represent a discount, or?
Well, they're still, even if in a condos, the same guidelines
It is?
apply.
Okay.
Yes.
Okay.
Because the other unit owners may have it, you have a unit above you or below you, they also might have it in their walls.
How about the water heaters?
Yeah, water heaters are very important as well. And the thing that concerns insurance companies about those are age. So they will allow you to have a water heater up to 15 years old. And when they are that old, they always, when they do the inspection, if they do an interior one, they'll check to see if the pipes are, there's corrosion going on. But if it gets over 15, they're more often than not going to require you to replace that. Even if it's in great condition, they're going to ask you to do that, and that's typically $1,000, $1,500.
That's right. How about the air conditioner?
Air conditioners is very similar to water heaters in that the age, they will want that to be typically 15 years or newer.
Okay.
And the big concern with air conditioners is obviously in Florida, we have mold problems. And you've got a lot of, I had a client recently actually who the pipe coming into his house and his air conditioner, it was recently replaced, and it for some reason got backed up, and he had a very significant water loss. So that's why they are very concerned with air conditioners. And of course they can come in and either state you to get an inspection stating everything is in good order, or require you to replace that.
Right. And how about replacement cost of a home if something happens to it? How's that evaluated?
Well, a lot of times when folks are buying homes, and understandably it's confusing because you have your market value, what they purchased the home for,
Right.
and what it costs to rebuild it. So from an insurance company's perspective, and primarily from a mortgage, a lender's perspective, they want it to be at replacement cost. So what is this house going to cost to rebuild? So if you've got a home closer to the beach and you pay a high premium because of the location, maybe it's a smaller home and maybe it would only cost you a few $100,000 to rebuild as opposed to purchasing it for $1 million. So as an insurance agent, what we do is we actually will talk to the buyer, we go to the property appraiser's website, and we can get various facets about the home, and we run these estimators, and that's what you need to be insured for.
And what about those little creatures that bark a lot?
Yeah, obviously with dogs, there are quite a few of those here.
Right, there are.
And Florida, there was a study done a few years ago. Out of all the states, we have a great state to live in, but there are a lot of things that come with it. And one of those things is dog bites. We are the highest average per dog bite in the country, about 30,000. And that was a study done a few years ago. So it all depends on the home insurance company you use. Some will cover you for animal liability if your dog bites someone,
Right.
Or some that won't. And one of the things that people don't factor in when they think about that are, you may have a dog that's never bitten anyone, but they can get startled. Your dog could get loose and could run into someone and cause them to fall over and have an injury, or run out
Right.
into traffic. Those are all things people don't really consider. So it's important to ask your agent, do I have coverage for my dog?
And that's relatively inexpensive, isn't it?
Yeah, it is. Typically, you can add some coverage on your policy for $30, $40 for the year.
Right. Well, Chris, we're going to take a little short break and then we're going to go back and just summarize just about everything we talked about, okay?
That's good.
We'll be right back. Thank you.
Thinking of buying a home located in a golf course community in the Naples, Marco, Bonita, or Estero, Florida? Here is what Mark Lai, former PGA winner, says about Realtor Michael York of the York Real Estate Group of Downing Fry Realty.
Hi, I'm Mark Lai. If you have any real estate needs in Naples, Florida, the one company to contact is the York Real Estate Group. Also, if you want a golf course property to invest in, Michael York of the York Real Estate Group is the guy to contact. Michael knows every golf course in Naples. I will tell you this, he's been in the golf business for a long time. He's played all the great golf courses down here, and he is an outstanding realtor. I've known him for quite some time, and he's he's got a lot of integrity, and he very much knows his stuff on all the different clubs here in Naples. So the York Real Estate Group is a great place to start. So if you have any time or anybody that wants to visit down here in Naples and look at the options out there, please contact the York Real Estate Group.
Welcome back. Well, Chris, I appreciate you coming on the show, but I think for our viewers, we've covered a lot of topics here. So let's just summarize the points that you think they should be looking for when they're purchasing a home.
Okay, sure. So to kind of boil it down, there are
Right.
5 main points you want to look at. You want to check your roof. How is its condition? Does it have some life left? You want to check what type of pipes you have. Is it a polybutylene type pipe or a galvanized plumbing, something to that effect? You know, what condition is your air conditioning, heating unit? What's the condition of your water heater and age? And then, of course, you also want to check what flood zone you're in when you're purchasing a home. And then, of course, the 5th item is you always want to review the policy that you obtain because there are so many coverages woven into those that, as a consumer, you don't realize what is and isn't in the policy. That's our job to explain that to
Till
you.
you have a claim, right?
Yes, exactly. And you referenced coverage for dogs, and
Right.
that's something most folks would just assume would be covered for, but carriers distinguish between that and other liability claims. So some other items you really want to look at in your policy are how am I covered for water damage if my pipes burst or I accidentally leave the sink on, something to that effect because water claims. How do I have replacement cost on my personal items?
That's right.
We see a lot of when somebody is referred into us and we shop all the carriers, we do see sometimes they'll bring in their current policy or another proposal they received from another agent, and we do see times when they will have a lower premium because these really important coverages like replacement cost on personal property, water damage, ordinance and laws, another key one.
That's right.
That are not included in these policies. And those are things that, yes, you certainly have the right and ability to choose not to go with those to save yourself some money, but most folks are not even aware that they aren't covered for them.
Yeah, what we've, Morgan, my daughter and my son Michael and myself, we've been trained to look at all these things over the years so we can help our clients, determine what kind of insurance they're really going to be able to get on a particular house without calling you first. But we always do that as a backup so they have a rate, because the rates are a lot different than they are north.
Yes, absolutely.
And people sometimes, are shocked by what they're paying insurance here versus up there, but then they look at our taxes and look and see how low it is here versus what it is up there.
Yeah.
So they're happy about that.
Yeah.
But again, Chris, I appreciate you coming on the show, and I hope maybe early next year you come back and give us a little update, okay?
Absolutely. Thanks for having me.
Thank you. See you next show. Thank you.